Before credit scores, people were given credit based on their character and relationships. This worked well in small communities where people knew each other. But as society grew, lenders couldn't know all their customers well enough to assess their creditworthiness. So, some industry experts came up with a system where lenders look at people's payment and borrowing history to determine if they have a record of being responsible. In the U.S., these are FICO scores. This method made assessing creditworthiness more efficient for people who have access to formal financial services. But it also made people without a formal credit history invisible to lenders. In India alone, more than 400 million people borrowed money in 2014, but fewer than 1 in 7 were approved for a formal loan from a place like a bank. That's the equivalent of only lending to people with a FICO score of 800 or higher in the U.S. Today, we have the opportunity to change this scenario. Mobile and internet access has reached a critical mass worldwide. And with every call, text, tweet, and status update, we leave behind a digital footprint. Data signals that advanced computation capabilities and algorithms can interpret to understand who we are. Lenders and data companies can use these digital clues to tell how we're connected within our communities and assess our creditworthiness, just like they used to. We're calling this new way of lending Big Data, Small Credit. This new approach can make potentially hundreds of millions of unbanked and underserved consumers around the world visible to lenders. Going back to India, Big Data Small Credit could increase the current consumer credit market by threefold. To make this happen, we'll need collaboration between innovators, financial services providers, data owners, and policymakers to create standards on key issues like data security and consumer privacy. Today, 7 out of 10 consumers are willing to share data they consider private to improve their chances of getting a loan or a bigger loan. And these funds can make all the difference to middle and low-income families by giving them a chance to weather emergencies that would otherwise throw them back into poverty and invest in a better future. Not only that, but better access to the consumer credit market will open the door to other formal financial services, like savings and insurance, paving the road to full financial inclusion for 1 billion people. Big Data Small Credit gives consumers the opportunity to create better lives, financial services providers the opportunity to open new markets, and emerging markets the opportunity to bolster their economies. In short, with Big Data Small Credit, everyone wins.